Hi there, and welcome to Safe Option Strategies, and welcome to our presentation, The Safest Way to Profit in Today's Market, How to Safely Make Money in the Stock Market Without the Risk of Losing Money. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies. I'm not going to spend much time making introductions about myself or about my company because I have a lot of information I want to cover in this presentation and not a lot of time. It's really truly my goal to keep this presentation down around 45 minutes. It may go just a little bit longer than that. Maybe I go a little bit shorter than that. Like I said, I've got a lot of information I want to cover. The main thing I want to do is help you understand that there are ways you can be incredibly profitable in the market and not have to take a lot of risk. In fact, there are ways to be very profitable, to be very consistent in the market and take no risk at all. And I know that sounds bold, but I'm going to show you how, instead of it being a gimmick, because you hear gimmicks all the time. I mean, a lot of you that are, for those of you that are on with me live right now, I know, welcome, by the way, some of you have seen my presentation. Some of you have seen it numerous times. I know that. I recognize your names. Some of you are seeing this for the very first time, and a lot of you have seen some type of advertisement or promotional piece, and you've just gone to my website and you're watching a recording of this. And I try and redo these recordings every couple of weeks so the information is not real old. But regardless of how you found us, and I welcome you. I appreciate you taking some time. I know you watch a lot of presentations like this. I doubt that mine is the only one you're watching. And I know you hear a lot of claims. I know you hear a lot of wild claims. I'll tell you a couple of my favorites. I started out with $4,500 and I turned it into a $50,000 a month income. That's one of my favorites. Another one of my favorites is I started out with a little over $2,000 and I've made more than $2.5 million now, and I'm in my private jet going around to different parts of the world, and I just open up my computer and trade from wherever I'm at, and you can do it too. Okay, I'm going to do something different in this presentation. I'm going to spare you. It's not different than what I normally do. It's different than what these people do. I'm going to spare you the phony baloney stuff. Okay, I'm going to spare you the wild, exaggerated claims that are simply stated untrue. I don't know that one company or one guy didn't take $4,500 and turn it into a $50,000 a month income, but I do know he cannot teach you how to do it because he had to rely on being flat out lucky and take way too much risk to do that. I don't know that the guy that you see on all these YouTube ads now, I don't know that he didn't take $2,000 and turn it into $2.5 million, and that he's not truly in a private jet roaming the world and doing these little promo pieces from different parts of it. I don't know that that's not the case. I know that he can't teach you how to do it because no one can teach you how to get lucky on the timing. No one can teach you how to fall backwards lucky into the perfect market scenario. What I'm going to teach you is a method that is consistent, that can be applied to any market conditions. I mean, any market conditions. And I'm going to talk about that in just a second here. And I'm going to teach you how to consistently outperform the market in a fantastic way without having to rely on any of that luck. Now, I want to get a couple of things out of the way right up front. Okay, these are important. I'm going to take just a minute with these really quickly, and then we're going to get right into the meat of this presentation. There's three things I want you to know as you go through this presentation. Number one, I'm going to teach you some things that you can use and apply starting right now today that can help you be a more profitable, much safer trader in the market. Okay. Number two thing that you need to know, and I'm being honest with you because I respect you and I respect your time. Number two thing you need to know, this is an introduction class and it is not intended to teach you everything we teach. I want to be careful how I say this because I don't want to offend anyone. I don't want to scare you away. I don't want to talk you out of watching the rest of this presentation, but this is not intended to teach you everything. This is intended to be an introduction. Is it a secret? Are you going to be upset if I give away the secret and say at the end of this presentation, I hope you have seen enough, and I hope I have sparked enough interest that you'll take a good close look at my education programs that I sell? I'm just being honest with you. Now, if you log off right now, if you turn off the computer right now, that's fine, because you fall into the category of someone who wants something for nothing. And you will get exactly what you pay for. If you want to pay nothing, you will get nothing except a very difficult education through the school of hard knocks. If what you want to do is learn from just the free stuff that is out there, you might make and lose a fortune many times over, or you can be willing to take a look at what we're doing. Possibly, if I get your interest up enough, and if you like what we're doing, maybe make a small investment into your education and learn a much faster route to get to where you want to go. Okay, so number one, I'm not going to overhype this. I'm going to teach you some real things that'll help you right now today. Number two, it's not meant to teach you everything. Okay, that's not my goal, is to teach you everything. And number three, I'm going to cut out all the BS. I'm going to show you real results. I'm going to show you real trades. I'm going to show you real things you can do. And I'm not going to give you a big major sales pitch. But I'm going to ask that in exchange for me being upfront and honest about these things, that you stay on to the end of the presentation and see what it is we have to offer, because I'm going to offer a pretty incredible discount to those individuals who will stay on to the end of this presentation. You have to see at the end how to qualify for this discount, okay? Look at this chart of the Dow Jones Industrial Average. I've just been talking, but I'm still here, even though the screen's not moving around and changing. Look at this chart of the Dow Jones Industrial Average. I took this screenshot right here almost exactly a month ago, middle of July. Sorry, I'm off. Middle of July, I took this screenshot. And the Dow Jones Industrial Average for the umpteenth time in the last 3 years was hitting a new all-time high. Fast forward 1 month, almost exactly 1 month. Here was the screenshot I took before, right about there. And look what's happened in 1 month. Hey, you hear people all the time say that more millionaires are made in the US stock market than any other way. I believe that's true. I also believe that more people lose everything they have in the stock market than any other way, including Las Vegas. I think more people lose everything they have when they put their money in the market and they don't know how to protect against things like this. See, I have a philosophy, and it's not mine. I've adopted it from other people, and you've maybe heard this before. I believe anyone can make money when the market is going up. I think there are some people that know how to make money when the market is going down. I have met very few people in my life who know what to do with this roller coaster of up and down and up and down and up and down. This is easy. This takes a little more understanding, a little more education. It's these reversals. That's what's hard about trading the market and being consistent and learning how to profit no matter what's going on. So here's what I'm going to cover in this class. I'm going to teach you how to trade with little to zero risk through something called collar trading. Some of you know what that is. Some of you don't know what that is. This is the #1 lowest risk way you can trade, and it is possible to trade with zero risk. Number two, I'm going to show you how to use adjustment strategies with option-only spread trading, and this is the second best way to be protected. There is a little bit more risk here than there is here, but you can still do this in a very low risk fashion. Then I'm going to take just a minute and introduce you to a way to create cash flow, little bit higher risk than this one and this one, but still far, far lower risk than most cash flow strategies that you've seen before. I'm going to try and do this quickly. I'm going to try and cram a lot of information into a very short period of time, so I'm going to go fast. All right, pay attention. Those of you that are with me live right now, I've got about 60 people that are here live, and that's about the average that I have when I do one of these presentations. I seem to get 50 to 70 people almost every time. Uncanny how that number works. Those of you that are with me live, type in questions as we go along. At the end of the presentation, I'm going to come back and answer your questions. For those of you that are watching a recording, at the very end of this presentation, I'll show you a simple, fast way to get your questions answered and to inquire if you want more details about what we're doing. Okay, let's start with zero risk trading. Is there such a thing? A lot of people will tell you no. You hear a lot of disclaimers when you hear about money managers, when you hear about education companies like mine, when you hear about businesses that you can get into that are stock market related or bond related. You hear people say all trading comes with risk. Don't invest money you can't afford to lose. What a bunch of garbage. Can you afford to lose money? I mean, really, when it comes right down to it, can any of us afford to lose money? I suppose if you have millions and millions and millions of dollars, maybe if you have billions of dollars, maybe you can afford to lose a few dollars here and there, but no one likes to lose money. So how do you put your money to work for you without creating risk? And why would I make that claim when everyone else says you can't be in the market without risk? I'm going to debunk that theory right now. Here's how. You ever heard of a collar trade? Okay, so some of you have, some of you haven't. And by the way, if you're brand new to trading your own portfolio, if you're brand new to being in the market on your own, you've never placed a trade before, you've been thinking about it, maybe you've played around in an account, maybe you haven't even opened an online brokerage account, we can teach you how to do all that. I think maybe somewhere in the neighborhood of a third of all my students have joined this program having never placed a trade on their own. They're learning it and doing it for the very first time. So I'm telling you that because if some of what I go over sounds like a foreign language, that's okay. Follow the concept of what we're doing, even if you don't understand all the terms, and we can teach this to you. Okay, what is a collar trade? It involves owning stock. Now I got to stop. I got to put the brakes on right here. I bet 70 to 75% of the people that watch this presentation like to trade options only, and they don't want to trade stocks, and that's okay, but don't shut off for this part of the presentation because it's more affordable than you think it is. The reason people don't like to trade stocks is usually because they're trading with a smaller portfolio. Folks, I've got people who are successful in my program who only have $3,000 to $5,000 they can trade with, and they're making money. And they're profitable and they're successful in what we're doing. That's not an exaggeration. You don't need to have tens or 20s or hundreds or hundreds of thousands of dollars. You don't need that much money. It's great if you have that much and you can grow it. But I've got people that are successfully trading my program and following the trades that we're doing with $3,000 to $5,000 to $10,000. Okay, collar trade involves owning stock. It involves using a long put option exactly the way you would use an insurance policy. Long put options were originally invented to be an insurance policy for stock ownership. Most people use them for other reasons. Most people use them in spreads. Some people use them just directionally to try and play a bearish market or a bearish stock. And that's fine. That's okay. That's not what they were intended for originally. Think about any big asset you have. Think about your home, your car. If you're fortunate enough to have a stamp collection or other memorabilia, if you have jewelry, if you have art, if you have something that's worth a lot of money, you're going to insure it, right? Why would you go put 10 or 20 or $50,000 in the stock market and have no way to insure it? Well, you do. It's called a long put option. The collar trade includes the stock, the long put option, and a short call, which is kind of like just getting someone else to pay for your insurance. I use this analogy. Every now and then I have an opportunity to teach younger people, junior high and high school students. And when I'm teaching them, this is a very applicable analogy. It's very realistic. Think about the first car you had. It might be mom and dad's car. Maybe they gave you a car. Maybe mom and dad gave you a car. There's your asset. There's your stock. Now, they said part of the condition here is you got to pay the insurance on it. Well, okay. If I've got the stock, if I've got the asset, I certainly don't want to lose it. I don't want it to crash and be worth nothing. So I'll pony up and pay the insurance. And then mom and dad said, well, now listen, we're going to give you an allowance each month, and it's pretty close to what your insurance costs. And you say, bingo, I've got no risk in this proposition. I've got the car, whether I bought it or mom and dad bought it. I got to pay for my own insurance, but they're giving me an allowance. That's the way the short call comes into play. It's just a covered call is all it is for those of you that do understand options. Okay, collar trades can be set up every single day of the week. I can find companies that you can set up in a collar trade with zero risk. Let me give you an example. I took this screenshot yesterday. This is very new information. I took this screenshot yesterday. Towards the close of the day, Best Buy was trading at $63.93. I chose Best Buy because everyone knows who this company is and because they have an earnings report coming up. What happens sometimes on earnings reports? Boy, company has bad numbers. They have bad revenue, bad guidance, bad profit margins, bad earnings per share. Well, that stock just tanks, doesn't it? And if they have good earnings, it might do the opposite. The thing is, we don't know. We never know. Going into that earnings report, you have no idea what it's going to do. So we buy the stock. We go out and buy our insurance policy. My stock is worth $63.93. I'm going to cover it for $65 a share. That's like owning a car that's a $25,000 car, a $23,000 car, but your insurance company says, hey, we can cover a replacement cost of $25,000. There's how much the insurance is worth. There's the premium you're going to pay. There's the period of time you're paying for that insurance. And here's your allowance from mom and dad to cover the cost of your insurance. You're going to go out and sell a short call at a 70 strike price for a credit. That's money someone's paying you of $395. And when you've done all that, when you've bought the stock, you've paid for the insurance, and you've got someone else to pay you. Now, the person that paid you, they can buy it away from you at 70. But if your cost is $64.68 and they buy it away from you at 70, number one, for a little over a month, we have no risk. And number two, if someone does decide they want to take it away from me, they have to pay me $70 a share to do it. And I'm making 8.5%, or a little over 8%. I won't round it up and exaggerate to 8.5%, a little over 8%. Now, 8% to some of you doesn't sound like much. But what is this worth to you right here? And I'm going to show you in a minute, I'm going to show you a way to make that way, way, way more. This is kind of the worst case scenario. This is the worst case scenario. Zero risk and up to 8% profit. How would you like to invest a huge piece of money and have the worst possible thing that can happen is that you don't lose any of it? And the worst thing that happens is you only make 8%. Because we have a long put strike price near what our average cost per share is of the stock, we've got our asset, we've got our insurance policy, and we got someone else to pay for our insurance, or most of it, and we have a zero risk trade. Now, a couple of you the people on live, a couple of you have already asked the question, what about the time between here and here? I'm paraphrasing. What about this time? This expires in 36 days. This is open for a long time. I told you at the very beginning of this presentation, one of the things I'm going to talk to you about is adjusting trades. We're not going to stay in the trade after September 20th. Or we're going to adjust the trade to stay in it long. We're either going to get out with zero loss, or we're going to take our profit up to 8%, or we're going to adjust the trade to get a lot more profit. I know it's hard for some people, but I tell every time I get asked the question almost every time I do one of these presentations, I'm asked the same question. What about all that time between the expiration of this option and the expiration of this option? And it's tempting for me to say, don't worry about it. I'm going to teach you. I'm going to teach you what to do in that time period. I'll give you a little more than that. we adjust the trade. We roll the long puts. We use the long puts to buy more shares of stock. We roll the short calls. We buy to close the short calls. We sell the stock, and we turn the puts into bull put spreads. There's a variety of things you can do with that. That's part of what we teach you how to do. Okay. For those of you that are newer, real quick lesson on how this long put works like an insurance policy. When a stock goes down in value, the long put that is associated with that stock goes up in value. It's a simple exchange. Stock goes down, long put goes up. Okay? You buy a stock, you go out and you buy the insurance policy on the stock. That's your long put option. Stock goes down in value. Long put option goes up in value. We don't get back the money we paid for the insurance policy, but we're not losing anything on the stock because the long put's going up. Stock goes down $50, long put goes up $50. All we're out is the $2 you pay. It's just like an insurance policy. You go out and buy a $50,000 car, and you get an insurance policy for $50,000, and it costs you $100 a month. And 3 months into that, someone smashes into your car, and guess what? You get the car replaced or repaired, so the car is made whole, but you don't get a refund on the insurance for those 3 months. It's the same thing here. The only money you're out is what you paid for the insurance. Now, everyone's heard of cost averaging. Let me take you a step farther in this, because I said I would show you a way to take that 8% and make it a lot more. You've heard of cost averaging, right? You buy a stock at $100, stock goes way down in value. You buy your next share. I'm getting ahead of myself. Stock goes way down in value. You buy another share down here at $50. You spend $100 here. You spent $50 here. You now have 2 shares of stock. Your total investment is $150, and your average price per share is $75. Okay, that's cost averaging. A lot of people do that. A lot of people teach that. I don't think that's a bad idea at all. I don't think that's a bad thing to do. Here's the problem. This is easy if you're doing 1 share here and 1 share here. What if you started with 100 shares here? Or 1,000 shares here? You spend $100,000, and now down here, you got to come up with another $50,000. Well, some people can do this. A lot of people can't. That's the challenge with cost averaging, is you've got to come up with this other $50,000 somewhere until you start cost averaging with long puts. When you get the stock and you get the long put option and the stock goes way down and the long put goes way up in value, instead of coming up with another $50 per share right here, you sell the long put. You use that money to buy the long stock, to buy the stock. The money that comes in right here is going to be equal to the money that goes out right here. So these two things are a wash. Now you have 2 shares of stock, and you've still only spent $100 or $102 because you had the insurance policy, and your average price per share is now $50 or $51 if you're including the cost of insurance. And you don't need that stock to hardly go up at all to be break even. And if that stock only ever made it halfway back to where you bought it originally, you realize you're 50% profitable. This is how to make that profit just explode. Okay, I want you to look at this stock chart. By the way, this is Under Armour. Some of you know who Under Armour is. They're the shoe company and the sports apparel company. They're probably, I think they're the biggest competitor to Nike in the United States. Adidas might be a bigger worldwide competitor, but Under Armour is a worldwide competitor as well. This stock is Under Armour. And this goes back to March and April of 2016. And I'm showing you this because this is an actual trade that we did with all of our students. Every one of our, now, not every student did 400 shares. Some of them did 100 shares, and some of them did 200 shares, and some of them did 700 shares. And I know one guy that did over 1,000 shares to start with. We did it with 400 shares. We sent this trade out to our students and said, here's a trade that you can follow us along in every step of the way. Every step we made, our students could follow us in this. For those that did 100 shares, it cost them $4,236 to start this trade. Folks, you don't need a ton of money to trade this way. We did 400 shares, so obviously we paid a little bit more. What's the first thing that jumps out to you in this chart? If you just look at the chart and you didn't even know who the stock was or what we had done with it, what's the first thing that jumps out to you? You realize from here to here, this thing is down a little over 55% from where we got in back here in April to where it's trading as of a screenshot I took yesterday. This thing is down over 55%, and it's been down way, way deeper than that. Doing exactly what I just showed you, using the long put options, getting someone else to pay for the long puts, and then cashing in those long puts. Every time those long puts were worth enough money that we could add shares without increasing our investment, we did so. We added shares right here. We added shares again right here. We added shares again right here. We made an adjustment that involved rolling our long puts out and up and doing the same thing with our short calls right here. We added more shares right here. We just added some shares literally a few days ago. And folks, in a little over 3 years, that's how long we've been in this trade, a little over 3 years, we have made almost 100% return on a stock that is down 55%. I told you this is not a get rich quick thing, but how many of you are averaging more than 33% a year on stocks that are down 55% from where you first got in? And this is one example. Just in the past year, we've done this with Apple. We've done this with AMD. We've only been in this one for a few months. That's just a few months. We just got into this one ahead of the last earnings report. These are all companies that we're sharing these trades with all of our students. This one we've just been in for a short time. This one we've been in a little bit longer. And there's the Under Armour one that I just showed you. More important than the profit on these trades, and this is one part of what we do. One part of what we do is the collar trading, one part of what we do is the spread trading with adjustments, and one part of what we do is the cash flow stuff. Because not everybody is the same. Some of you have a portfolio that you just need to protect. Above anything else, you just need to protect the money you have. That's the collar trading. You can still grow it in a fantastic way. But more important than any of the profit is that we were never at risk for any losses in these trades. Between the setup of this trade and the adjustment of this trade, we never had it at risk for any kind of a significant loss. That is the power of what we're doing here. For those people who want to be a little bit more aggressive but still minimize their risk, they don't have a large enough portfolio that they feel like they can own stock and collar trade it. We teach you how to spread trade, and we take this same concept of adjusting and we apply it to option only trading. Because the reality is, every time you place a trade, you are making an educated guess. And if part of that educated guess does not include a backup plan for what happens that you don't want. See, every time we place a trade, we have an expectation. We're making an educated guess based on the best information we can find, and we have an expectation of what we think the stock will do. Up, down, sideways. But it can't do all three of those at the same time. Whatever our expectation is going to be, there's a 2/3, 66% chance that it's going to do what we don't want to do. And sometimes people challenge me and say, hey, I don't care if it goes up or down. It can go sideways. Or excuse me, I don't care if it goes up or down. But in a trade that needs up or down, it can still go sideways on you. Some trades you need to go sideways and they could go up or down and be a bad trade. Some trades you need to go this way and either of these ways would hurt you. We do our research, we do our due diligence, and I think we're really good at Safe Option Strategies at teaching you the right amount of technical analysis, the right amount of fundamental analysis, how to pick the right stocks, how to pick the right trade, how to set up the trade in the best possible way. I think we've gotten really good at teaching all that, and we still recognize that the stock can do something we're not expecting, like this. Was anybody watching Boeing back in March of this year? Boeing was setting new all-time highs at the end of February, and all of a sudden the news broke that for the second time in less than 6 months, one of their 737 MAX jets had crashed for the same reason, or at least it was early on suspected, for the same reason as the one that had gone down 6 months ago. And from $440 a share down to $360, and I took this screenshot a couple months ago, Boeing is down here in the $320 range right now. I'll be honest with you, back at the end of February, I thought Boeing was going to continue to go up. I thought Boeing was going to hit $500 a share. I didn't think they'd be back down to $320. And folks, no one predicted this. No one saw this coming. So no matter what our research told us, no matter what our due diligence told us, no matter how much we thought we knew what Boeing was going to do, we could have been dead flat wrong in that trade and been in big trouble. People tell me all the time that they get 2 out of 3 or 3 out of 4 or 9 out of 10 or 19 out of 20 trades that go their way, and one losing trade is costing them their winning portfolio. It can be because they thought they knew what was going to happen, but we never do. They might just be a victim of some bad luck, wrong trade, wrong time. I think the number one reason they run into trouble is because they don't know how to set up trades that can be adjusted. Anytime you get into a trade and you have a certain expectation, you need a backup plan. And let me tell you something right now. If your backup plan is I will get out with a stop loss, you're in trouble. And some of you know that already from experience. But if that's your backup plan, folks, you're in trouble. I have people all the time tell me, look, I set up trades that have a profit potential of 80%. I'm not greedy, so I set my profit target at 50%. And I'm going to set up a stop loss. And if it goes against me, I'm going to get out with only 5% loss. So if 3 out of 4 are making this much money and the 1 out of 4 is only losing this much of a percentage, I'm going to be fine. Here's the problem. Here's what happens to a lot of people. Trade starts to go their way. They start wondering whether they're going to get to a 50% return. They jump out with a 25 or 30% return. And then these ones that go against them, they don't get out at 5% even with a stop loss. In the blink of an eye, when something goes wrong, it goes sideways on them, it goes down on them. In the blink of an eye, what they thought was going to be only a 5% is gapping down for no reason that you could have no expected event, no expected reason. Suddenly that's going down, and this is a 65 or a 70 or an 80% loss in just the blink of an eye. And even the stop loss won't protect you from that, because all the stop loss does is trigger your broker to get out of the trade when it goes through that point. Well, if it's going through 5% here, but it opens the day down here, your loss is huge. And I'm not saying this like in a hypothetical way. I know this is happening to people every day. A trade adjustment this is my definition, when we roll one or more of our options in a spread trade or a collar trade, or when we add a new option to an existing trade, such that the roll or the addition of the option changes the expectation. We change the direction of our trade to match the direction the stock just moved to. And we also change our target break even and our target profit on the trade. That's an adjustment. When you try to trade options only without adjustments, this is the type of scenario that happens to people over and over and over and over again. They make a nice little profit, they add it to their principal so that they're trading with a little bit more the next time. Then they make some profit and they add it to that principal and they're trading with more on their next trade. And they're making good, they're being conservative, they're making good returns. And then that one moves against them. And because they didn't know how to adjust it and they didn't create a trade that could be adjusted, all of a sudden, in the blink of an eye, that loss is wiping out more than the combined profits that they had made. And they've won 3 out of 4 trades, but they're losing money. When you learn to option trade using adjustments, and that's a large part of what we teach here, we'll show you how to set up the same 4 trades in a way that they can be adjusted. If it's set up correctly so that it can be adjusted. And when this one moves strong against you, you're going to make an adjustment that gets you out of the trade without losing money. And the same 4 trades with the same 3 working and the same 1 not working are going to show you a profit instead of that 35% loss or 34% loss. 86% difference between these 2 scenarios, folks, just by learning how to make these trade adjustments. And that is a large part of what we will teach you. Now, a lot of people, more and more, I'm getting calls, I'm getting emails from people that they're not in that mode where they just want to protect their money. They're not in that mode where they want to grow it and they can afford to be a little more aggressive. They have earned a certain amount of money. They have saved a certain amount of money. They have put away for trading a certain amount of money. And they are saying, I need to turn this into a consistent, steady income. I need cash flow from this money. And the biggest problem they run into is that every company involved in investment education that I am aware of that teaches cash flow strategies relies heavily, if not completely, on credit spreads. And oh, those credit spreads are so appealing. Someone is going to pay me money to be in a trade. I got to get in on that action. You mean I don't have to spend my money? I'm actually going to get paid to be a participant here? I got to be a part of that. And what they focus on is this credit that they're going to get for being in the trade. And they focus on this return in a short period of time. These are oftentimes short in duration trades. And they tend to miss this part of the equation right here. Now, I'm not against credit spreads. Part of the Safe Option Strategies education is we teach you how to use credit spreads. We teach you how to use them in the right situations. We teach you how to use them at the right time. We teach you how to find the right ones. And we teach you how to be extremely cautious with them, because credit spreads, while they are very appealing and very attractive for cash flow strategies, they are the most difficult trades to adjust. I just spent time telling you how important it is that you learn to adjust trades. You can't adjust a trade that can't be adjusted. There's no such thing as adjusting a trade that you've set up such that it cannot be adjusted if it goes against you. And I see people doing that all the time. Competitors of mine who claim to teach adjustment strategies over and over and over again. I have potential students or existing students that show me the trades they're being taught by these other companies. And I'm like, why would you do that? That trade cannot be adjusted if it goes against you, or the adjustment's going to be incredibly difficult. Credit spreads are attractive trades, but just as one example, and this is not the only trade we use, but as one example of why we have been so incredibly successful with our cash flow program and our cash flow course, is that we teach an alternative strategy to this and an alternative strategy to some other trades that have a very similar percentage return, same amount of time in the trade. We're even using the same strike prices on the same options on the same companies. I'm switching these from bull put spreads to in the money bull call spreads. And I don't have time to go into it in this class, but I can teach you how those 2 trades require exactly the same trend over the same period of time. So if your due diligence tells you that everything looks good for a bull put spread and you can get the same or similar returns on an in-the-money bull call spread, here's the big difference. Watch up towards the top of the screen. Credit spreads are hard to adjust. And in-the-money bull call spread, when it goes against you, it is easy to adjust. And 9 out of 10 times the adjustment will lead you to profit, and 1 out of 10 times the adjustment's going to lead you back to break even. Now, a lot of the strategies we use for the cash flow program are similar to the strategies we teach in the spread trade program, but the application of the strategies are a little bit different. Shorter durations of time, more frequency of trades, in and out of more trades. But when you combine those two, this is just what we've done in these last 2 months that have been crazy, wild, volatile. Every trade we've opened with our students for the last couple months has been profitable. And in only 2 months, a combination of our spread trades and our cash flow trades have seen a 31% return in just the last 2 months. Folks, almost a third of these trades that you're looking at right now were adjusted. They didn't do exactly what we wanted them to do from the time we opened them. We adjusted them, and in every single case that we adjusted them, we went to a profitable trade. We took a losing trade and we turned it into a winning trade. And I'm not bragging. I'm telling you, this is what we can teach you to do. This isn't about luck. Look in the last 2 months at our market conditions. We had almost low points of the year at the end of May. We had new all-time highs by the middle of end of June, middle of July. We've had near correction territory sell-offs just in the last 2 weeks. And just yesterday and today, we're getting a rebound of several percent in the major indexes. We've seen everything the market can throw at us just in the last couple of days. Right up here, we had a couple weeks where everything was stagnant. I'm not saying this to brag about what we're doing. I'm telling you, this is what we can teach you to do. And we take it a big step beyond that. We provide you with trades all the time. 5, 6, 8, 10 new trades every single week that you can follow so that you can duplicate exactly what we're doing while you're learning it. We have, this is just the last 6 years. This goes back almost 15 years now. We have not had a single year that we have been in business at Safe Option Strategies that we have not outperformed the market in a significant way. Year to date, the Dow, the NASDAQ, and the S&P, they're all still in positive territory, but they were a lot higher than that just a few weeks ago. We're crushing it this year. At the beginning of the presentation, I'm almost done, by the way. At the beginning of the presentation, I was real honest with you. I told you this is not a something for nothing thing. This is not meant to teach you everything, but let me tell you this. I'm well aware of what's out there in terms of investment education. I know what is offered. I know who my competitors are. I know what they charge. Some of them are real gimmicky. They'll get you in the door for $50 or $100 or $500, and you get excited and you're like, man, I can afford that. And within a week or 2 or 3 after spending that money, you find out that you've got one little tiny piece of the puzzle, and that their ultimate goal and their end strategy is to upsell you to more than $10,000, $15,000, in some cases more than $20,000 worth of education. I told you also at the beginning of this presentation that I would be brutally honest with you and spare you all the BS. Folks, I have for my entire education program, I believe, in fact, I know for the content that we provide, it is by far and away the most affordable education that is out there. And what you pay is what you pay. We never, ever, one single time, try and upsell you. You can talk to any student that has ever been in my program in the last 15 years, and they will tell you that not one single time have we ever tried to upsell them to something additional. Let me share a real quick story with you, and I'm going to wrap up. Had a guy join my program back in April. Now, this is the same 6-month chart that you looked at right at the beginning of this presentation. Okay, I just smushed it real squished it in on that one side of the screen for you. He joined right in this area right here. It's about right in the neighborhood of mid-April. He joined our program. Had about 65,000. He didn't have to share. No one has to share with us how much they're trading with, but he shared it with me. Told me he had $65,000. Showed me the stocks that he was in. Showed me some option trades that he was in. We took the first few days that he was in the program. We helped him restructure his portfolio. Got him out of some bad positions. Got him out of some bad trades. Helped him get into the right stuff. Okay, that was right about there. Remember May? Worst May we've had on record in over a decade. Markets went in, all the markets went into or came near correction territory, more than pullback territory, almost into correction territory. If he had not joined our program and had not made some major changes in his portfolio in that first week he was involved with us, his stock would have been down over 17%, and the option trades that he was in would have lost 70%. And overall, he would have been down almost $30,000 in his portfolio. Instead, he did not lose one penny of his portfolio's value during this stretch. He's made over 25% increase to his net portfolio. Even though that's not 25% up from there to there, he was up 25% as of mid-July. And on this most recent dip we've made down, he hasn't lost a penny and has in fact gained a little bit. And I'm telling you right now, if we get back up to where he started, and we will, I know within the next month or two we will, if he gets back up to where we started, he is probably on pace to be up more than 50% in his portfolio in less than a 6-month period of time, if over the next 2 months we get back up to where he started. Now, this is cool. This is priceless. This is why we do what we do, so we can sleep at night, so that we don't have to worry about a tweet from the president, a comment from the Fed chair, an interview with a large hedge fund manager, a news report about China tariffs and trade war. We don't lose sleep over what those things are going to do to the market tomorrow or next week. And my question for you is simply, how much is it worth to you to know you won't lose money anymore? Like I said, this is great. This is priceless. You all heard this before? Feed a man to fish, you feed him for a day. Teach a man to fish, you feed him for life. I love that. I think the first time I ever heard that was from my grandpa. And I love my grandpa. He's been gone for a number of years, but I loved my grandpa. In fact, a couple decades he's been gone, several decades. Anyway, great man. I think he's the first person I ever heard it from, and I think because it was him, I just believed it. And then as time went on, I believed it more and more because I came to recognize the truth of it. But let me tell you something that's true. I'm not exaggerating this. I'm not making this up. I've got a really good friend, and I have a brother-in-law who is also a good friend. He's not one of those in-laws you don't like. He's a brother-in-law who I really like. They are both very good fishermen. They take their boys out to fish all the time. They love to fish. It's one of their favorite things to do. And I watch them pull fish out, or I hear about them pulling fish out wherever they go. Whatever bait they're trying, whatever, if they're in a river, a lake, the ocean, I hear these stories about how they do. And I've been with them before, so I've seen them do it. And I've been with them before, and I've tried to do exactly what they're doing, and I get nothing. And the thought occurred to me one day when I was sharing this with someone. And I said, what happens if the man starves while he's learning to fish? Because I actually thought about this. If my friend or my brother-in-law, if you gave them some fishing tackle and some bait and you sent them out into the wilderness and they had to survive only off of what they could pull out of the lake or the river, they'd be fine. If I had to do that, I would die of starvation. There wouldn't be enough left of me for the wolves and the bears to even want me. I have to rely on them until I've done it enough to get better, or I will starve. What we do at Safe Option Strategies is simply this. We teach you how to do this so that you can eventually do it on your own. But while you are learning to do it, we keep you very well fed. We provide you with trades all week. New trades that you can get in and follow, and our track record of trades is fantastic. I would hold it up to anyone in this industry. While you're learning it, we teach you how to do it. Or excuse me, that came out wrong. While we're teaching you how to do it, we're doing it with you, and we're keeping you fed. I know for a lot of you, one of the hardest things is that you've maybe spent money on investment education before, and you're thinking, I don't want to do it again. I got burned before. It didn't work out. Even if you don't feel burned, maybe you just feel like it was a waste of money. It didn't work out. Folks, I am so confident that if you will look at what we're doing, if you'll look at the pricing, if you'll ask questions, I don't want anyone joining my program if I cannot answer their questions thoroughly and honestly. And I never try and talk someone into it. I answer your questions and let you decide if this. I don't hire salespeople. I don't have any salespeople that work for Safe Option Strategies. If what I'm showing you and if the process of answering your questions is not enough for you to join our program, then you don't belong in our program. And it's not that I don't want you in, it's that I don't want you in if you don't feel good about doing it. I've never used any criteria to measure the success of this company beyond the success of every one of my students. And I offer this program with an unconditional money back guarantee. No one else has a guarantee like I do. There is no timestamp on it. If I cannot teach you how to make money, I will give you your money back. It is that simple. Not everything we do is a perfect match for everybody. Some people are just interested in our collar trade program. We offer it in a 1 year or a lifetime membership. Some people are only interested in the spread trade program, 1 year or lifetime membership. Some people just want to learn the cash flow stuff, 1 year or lifetime membership. It's that simple. Our retail prices on these programs, the most you could pay on these programs ranges from $1,500 to $2,500, depending on if you want to do 1 year or lifetime. And I have no intention of charging you that much. If you will email or call, this is for those of you that are with me live right now. If you'll email or call, I will send you an email with all the details of the discount that we're running right now. And we'll give you, we'll give you 72 hours or so to think about it. I don't leave that discount open indefinitely. I'll give you some time to think about it, some time to answer your questions. I don't put pressure, undue pressure on people, but I reward people who are proactive. The people that need 2 weeks or 3 weeks to think about it, the stock market is not the right place for you. I'm sorry. For those of you that are on my website, on the web page that you were directed to through an email or an advertisement of some sort, and you're watching the recording of this on the website, when the recording is done, just scroll down. There's a form that you can just put your name, your email address, and it's not a required field, but if you want to put your phone number in there, I will give you a call. If you don't put your phone number in there, no one will call you. We will not bug you. We will not chase you for your business. There's a place to type in questions if you have them. And if you'll fill out that little form, it takes you about 10 seconds. Anyone that is live who will email or call within an hour after this presentation is over, anyone who's watching the recording, if they'll just scroll down below it and fill out that form within an hour, I will offer you a very deep discount, even below what I've already told you. And folks, let me tell you something right now. I said the maximum you could pay is between $1,500 and $2,500 for any one of these courses at the full retail price. Do you realize that on average is about 75 to 80% lower than anyone who even comes close to offering the same amount of content, the same amount of live classes, the same amount of live support that we offer. This is but I know some of you are looking at this and saying, oh, I can never afford that. That's because you think you can spend $200 or $50. And I promise you, the people that are doing that, they are deceiving you. It's a bold-faced lie. They'll take your $50 or your $200, and I guarantee you their goal after that is to get you up to $7,500 to $15,000. I know who my competitors are, folks. I know how much they charge. There's one company out there that teaches some similar strategies to me, and I have a lot of respect for their strategies and for their methods, but they want more than $15,000 from you to do the whole thing. And I won't let you spend more than that for me for a lifetime membership in any one of these courses. And if you call or you email or you fill out the form below, I'm going to drop it even farther below that in price. But I'm not going to leave that discount open forever. Folks, I'm done. I'm wrapping up. I may have taken a little bit longer than I intended, but I hope you learned something. I hope you understand. I will answer your questions. You can call, you can email, you can fill out that form. Me or someone else will get back to you. We'll answer your questions. No one here will try and sell you our program. We'll let you decide if it's a good fit. And if it is, and if you trust us enough to buy this program, I personally will bend over backwards to do everything I can legally do to help you profit, or I will give you your money back. It really is that simple. If you're watching the recording, we're done. If you are live with me, it's going to appear for a moment that we're done. We're not. I'm going to get a drink of water and clear my throat and pause for about 15 seconds. I'm going to be back to answer your questions. Thanks, everyone.